No. Why? Because the contract still has several weeks to go before it expires, so there was no need to panic. As a matter of fact, the viewer took advantage of the move and said, okay, you want to go up on me? The stock, you want to go up $4, $5, whatever you've done? Great. I own either shares of this thing or I own deep in the money calls on this thing. That's the only way I can write options against it. What I own is more valuable by like $4 a share. What I've written on is only up 40 cents a share. I'm actually ahead 360 in book value in my account. But even with that, throw that aside. What did they do? Bought back the calls that were written to turn around immediately and write new calls, the same strike price further out in time. And they just added money to their account because the call you're buying back today that expires in, say, 2.5 weeks, and you replace that with a call that expires in 4 or 5 months, you're going to bring in dollars per share in added premium for the same strike price. This viewer is saying to the world, look, I wrote these calls a couple of months ago, 3 weeks ago, whatever I wrote those calls, the stock was lower. And the calls I wrote were out of the money. And today the stock is higher and the calls are still out of the money. Not by much, but they're out of the money or they're at the money. It doesn't matter to me. I'm quite happy to say, take me out. I dare you to exercise me. You now have to exercise me where I get to keep this much more money from writing these new calls. I just added a couple of dollars per share equivalent into my account by extending the contract life of a contract. I bought back the old contract that's dying in 2 weeks and wrote a new one that's now got till next year, sometime April, May, to live.